So what is the difference between surety bonds and insurance? Sheila Thompson, the president of Rosenberg and Parker of Canada, a company that specializes in writing surety bonds, explains.
Insurance is a two-party contract. You have an insured and you have an insurer, and you have a group of losses that you want to cover. And so if there's a loss that happens that's covered by the policy, the insurance company steps in and resolves the problem, makes good the loss. In surety, there are three parties. There's the insured, which we call the principal, the one who's actually performing the contract. There's the obligee or owner, the one for whom the principal is performing the contract. And then there's the surety company that's guaranteeing that contract. So you have a contract between a contractor usually and an owner to perform work, and the guarantor is the surety company to guarantee that contract.
In Canada, there are two types of surety bonds, contract and commercial. Sheila discusses the differences.
Contract surety guarantees performance of construction contracts. It also guarantees payment to subcontractors and direct suppliers. So that is used in the construction marketplace. The commercial surety marketplace is very different. It guarantees compliance with a bylaw, compliance with an act of parliament. For example, customs bonds, which are guaranteeing payment of duties as goods cross the border. There may be legal bonds that are used in court cases to guarantee payment if there's a ruling against someone. Administration bonds in the case of someone who's died without a will, to guarantee that the administrator will execute the will in accordance with the terms and conditions of the will and also with the provincial law. So it's very different. In the U.S., we have the same distinction between contract and commercial. Commercial in the U.S. is a broader kind of definition, because in the U.S. we'll look at companies who are usually Fortune 2000 companies who are performing construction-style contracts, but they may be supply-style contracts. They may be actually issuing construction bonds, but not so much looked at it as a constructor. In Canada, it's more, I would think we're skewed more to contract than we are to commercial surety.